What if I told you that every dollar, euro, pound and yen you've ever touched was never truly yours? That behind the polished walls of central banks, the so-called guardians of stability, exists a hidden empire, one that doesn't appear on maps, doesn't answer to voters, and yet dictates the fate of entire nations. This empire has no flag, no army and no borders, but it owns the flow of money that governs the world. Today we uncover how it came to be, how it operates in plain sight, and how its influence reaches into every corner of your financial life. Section 1. Setting the stage, the illusion of independence. When we think of central banks, like the Federal Reserve, the Bank of England, or the European Central Bank, we're told they are independent institutions, created to keep the economy balanced and inflation in check. But what if independence was just a word carefully chosen to mask dependence on something much bigger? Because hidden beneath those marble pillars and economic forecasts lies a structure, a global network of ownership and debt that links nearly every central bank to a handful of powerful private entities. The story doesn't start in our time. It begins centuries ago, when money itself was being reinvented. Section 2. Origins, the birth of control through debt. Our journey begins in 1694, when England was at war with France and desperate for funds. The government turned to private bankers who proposed a revolutionary and dangerous idea. They would lend the crown £1.2 million, not in gold, but in paper, promissory notes. In exchange, they would be allowed to issue these notes to the public as money. Thus, the Bank of England was born, not as a government institution, but as a private corporation lending money to the state and charging interest for it. From that moment, the foundation was laid. Governments would borrow, private banks would create the money, and the people would pay the price through taxes and inflation. This model spread like wildfire. France, the Netherlands, and eventually the United States all followed. And with each new central bank came the same silent rule. The debt would always exceed the money supply, ensuring perpetual dependence. Section 3. The rise. From gold to paper to nothing. For centuries, gold anchored money to something real. Every note was backed by a measurable quantity of metal. But in the 20th century, everything changed. After 2 world wars and a Great Depression, the world was desperate for order. So in 1944, 44 nations gathered in Bretton Woods, New Hampshire, and created a new system, the Bretton Woods Agreement. It tied global currencies to the US dollar and the dollar to gold. The United States became the central pillar of the global economy, with its Federal Reserve sitting quietly at the heart. But in 1971, President Richard Nixon shocked the world. He ended the gold standard, severing the last link between money and tangible value. From that day, money became pure debt, a digital promise created by keystrokes and confidence alone. Central banks could now print without limits, governments could borrow without restraint, and inflation could quietly erode purchasing power, a hidden tax that few understood. The empire's power had reached its peak. Section 4. The hidden network. Who really owns the system? Now here's where it gets darker. When we talk about central banks, we often imagine public institutions, but many of them, including the Federal Reserve, are structured as hybrid entities. They serve the public, but their shares are held by private banks. For example, the 12 regional Federal Reserve banks in the US are owned by commercial banks, including giants like JP Chase, Citigroup, and Bank of America. In Europe, the same structure repeats. The Bank for International Settlements, or BIS, founded in 1930, quietly oversees the network. It's based in Basel, Switzerland, and acts as the central bank for central banks. Its members include 63 central banks, representing 95% of the world's GDP, and yet the BIS itself is above national law. Its buildings are inviolable, its employees immune from prosecution, and its records untouchable by any government. Through the BIS, the flow of global monetary policy is coordinated. Interest rates, liquidity, bailouts, and currency interventions. In essence, this is the headquarters of the hidden empire, invisible to the public eye, yet shaping the destiny of every economy on Earth. Section 5, the breaking point, when the system turned against the people. The 2008 financial crisis exposed the illusion. When banks gambled and lost, governments didn't let them fail. Central banks printed trillions to rescue them, transferring private losses into public debt. Ordinary people lost homes, savings, and jobs. But the same institutions that caused the collapse grew even bigger. The debt mountain exploded, and yet the architects of the crisis faced no consequences. Instead, the empire expanded its reach. After 2008 came quantitative easing, the creation of trillions of new dollars and euros to stimulate the economy. But most of that money went to financial markets, not the real world. The result? The wealth gap widened. Stock prices soared while wages stagnated. Billionaires multiplied, the middle class shrank. The system had evolved, from managing economies to managing perception. Section 6, Modern Parallels. The digital cage is being built. Today, the hidden empire is preparing for its next transformation, one that could make previous systems look primitive. Central banks worldwide are testing central bank digital currencies, or CBDCs. At first glance, they seem modern, efficient, cashless, secure. But behind the marketing lies a darker potential. If money becomes fully digital, every transaction can be tracked, every purchase approved or denied, and every citizen monitored through programmable currency. This isn't speculation, it's in official documents. The European Central Bank, the Bank of England, and even the People's Bank of China have all published pilot programs for digital currencies tied directly to identity and behavior. The same institutions that control money creation now seek control over money use. In this new system, privacy could vanish, economic dissent could be punished, and control over the population could be total, not through force, but through finance. Section 7. Repeating patterns. The empire never dies, it evolves. Every era of financial history follows the same pattern. A crisis leads to consolidation, a collapse leads to control, and a solution leads to surrender. From the goldsmiths of London to the Rothschild banking dynasty. From the Bank of England to the BIS in Basel, the pattern remains unchanged. Whoever controls the debt controls the world. The hidden empire has no single name, no face to blame, only a network of influence, refined over centuries, sustained through complexity, and protected by public ignorance. Section 8. 3. Takeaways, warning, and call to action. Takeaway 1. Central banks were never designed to serve the people. They were built to manage debt, not eliminate it. Takeaway 2. The real power doesn't lie in politics or military might. It lies in who controls the issuance of money. Takeaway 3. Every new crisis is an opportunity for the system to expand its reach, and digital money may be its final frontier. Warning: if citizens remain unaware of how money is truly created and who benefits from it, the next phase of control won't come with chains or guns. It'll come as a software update. So the question isn't just who owns the banks, it's whether we've already sold our freedom, one transaction at a time. Outro. Call to action. If this video opened your eyes, don't let it end here. Share it, discuss it, question everything. Because understanding money isn't just about wealth, it's about freedom. And the first step to breaking the empire's spell is realizing it exists.